Hello everyone, welcome back to our channel. In today's video, we will learn the most important basic accounting terms with simple examples. Whether you are a student, small business owner, or preparing for an accounting job, this video will help you understand accounting easily. So let's get started. Let's say the first one, bookkeeping. It helps track income, expenses, profit, and loss or financial position. Bookkeeping is like maintaining a diary of all money related activities in a business. Another definition is bookkeeping is an art of recording the transactions in the books of accounts in a systematic manner. For example, bookkeeping example that will help you understand how to record income and expenses in your business. Let's get started. In bookkeeping, we record all financial transactions systematically. Let's look at three transactions. Here, sales income. Sales income, you earned 5,000 rupees from sales. This is your income. And goods purchase, you spent 2000 rupees for to buy goods. This is your expense. And 500 rupees electricity bill, you paid 500 rupees for electricity. This is also an expenses. If you deduct this 2500 rupees from your income and remaining, you will get 2500 rupees. This is called bookkeeping. So let's see, the next one is, what is accounting? Accounting is the process of recording, summarizing, and reporting financial transactions. The example of accounting, imagine a small business named ABC Traders. This company sells mobile accessories to keep track of its financial position. It records all its income and expenses. For example, a company records its details and expenses to track its profit and loss. If we see revenue, let's say ABC Traders sold products worth of 50,000 rupees in a month. This is recorded as sales revenue. And expenses, the company also costs such as rent for the shop 10,000 rupees, purchase of products cost of goods sold 20,000 rupees, employees salary 5,000 rupees, electricity and other expenses 3,000 rupees. Then we have to calculate the profit or loss. Then we will get what is, we will get profit or loss. Okay. The next one is, what is a transaction? Transaction is nothing but a financial event that affects a business between two or two persons or two accounts is called as transaction. Let's see the example of transaction. Buying a mobile for 20,000 rupees. Imagine you buy a new smartphone for 20,000 rupees. This is a transaction because money is going out of your pocket. Money is going out of your pocket, cash payment or bank transfer. You are receiving a mobile in exchange. You are receiving a mobile in exchange. It has a monetary value that can be recorded. And example 2, receiving a salary of 50,000 rupees. Suppose you work in a company and receive a salary of 50,000 rupees in your bank account. This is also a transaction because money is coming into your account. Money is coming into your account. It has a measurable financial impact. The company records sorry the company records it as an expenses and you record it as income. Okay, are you understanding here? The next one is assets. Assets are things a business owns that have value and can be used to generate income. Resources owned by a business that have value. Assets are two types. One is tangible asset and second one is intangible assets. Tangible assets are physically we can touch and see. Intangible assets are which we cannot see and touch is called as intangible assets. For example, here we see assets example. Imagine you own a shop. The things you own in your business, like for example, cash, money in hand or bank, 50,000 rupees. Stock, products available for sale, 20,000 rupees. Furniture, chair or table, 10,000 rupees. Machinery like equipment used in business, 1 lakh rupees. These all things are called as assets. Okay, let's go next. Another liability. Liability is nothing but amounts a business owes to other. Amounts a business owes to other. If you see the example of liability with simple example, let's see a bank loan of 2 lakhs. This is a long term liability. This is a long term liability because it is a debt that needs to be repaid over a time. Repaid over a time. And next, payable of 30,000 rupees. This could be outstanding bills or payments due to suppliers, making it a short term liability, is called as liabilities. The next one is capital is the money or assets used to start and run a business. In simple, money invested by the owner or proprietor in the business is called as capital. Let's see the example of capital. Imagine you want to start a small shop or small business and you have 1 lakh rupees. This money is your initial capital. 1 lakh rupees is your initial capital. So every business needs capital, whether small like a shop or big like a company. So capital is the foundation of any business. The more wisely you use it, the more your business can grow. The more your business can grow. It's called as capital. Now let's see the next one. Revenue and expenses. Revenue is the total money a business earns from selling goods or services. It is also called as sales or income. Revenue is also called as sales or income. For example of revenue, imagine a shop selling various products. If the shop sells goods worth of 5 lakhs rupees, this is its revenue because this is the total money earned from customers. Total money earned from customers. Next, what is expenses? Expenses are the costs a business incurs to run its operations. This includes rent, salary, uh, electricity bill, raw materials, and other expenses is called as expenses. Let's say cost paid for running a business is called as expenses. In our example, the shop has to pay uh, rent 10,000 rupees and 50,000 rupees as the salaries of employees. Salaries for employees. These expenses because they are costs required to run the business. So it is called as revenue and expenses. So the next one, profit and loss. Profit and loss are important concepts in business and accounting. They help us understand whether a business is making money or losing money. Let's take two examples of make it easy. Here, let's see. Imagine you have a small business and your total revenue income is 1 lakh. Total revenue income is 1 lakh, and but to run the business you have expenses like rent, salary, electricity and materials which total 70,000 rupees. Now we calculate profit using the formula profit equals to revenue minus expenses. Total we will get profit is 30,000 rupees. Since let's see the example 2, loss. Now let's take another case. Suppose your revenue is 50,000 rupees. 50,000 rupees, but your total expenses are 60,000 rupees. So using the formula, we will get loss 10,000 rupees. It's called as profit and loss. Here, the formula is given. You can see that. Okay. Let's next one is debtors and creditors. Do you know what the terms debitors and creditor means in business? Let's make it super simple with real life examples. Debitor means someone who takes goods or services, someone who takes goods or services on credit and has to pay later is called as debitor. And creditor, someone who gives goods or services on credit and will receive money later is called as creditor. For example, imagine a customer comes to your shop and buys goods worth of 10,000 rupees and on credit. This means the customer will pay later. In this case, the customer is called debitor. Customer is called debitor because they owe money to your business. Creditor example is, now let's say your business buys a stock of 15,000 rupees from from a supplier, but instead of paying immediately, you promise to later. Here the supplier is creditor because your business owes to them money. Is called as debitors and creditors. Now let's see the next one is depreciation. Depreciation is the decrease in the value of asset over time due to wear and tear, usage or obsolescence. The decrease in value of an asset over time is called as depreciation. Let's take an example. Imagine you bought a machine for 1 lakh rupees. Every year the machine loses 10,000 rupees per year. The values. This means that the machine's worth keep decreasing as time passes. Let's see the first year like this. Okay. For year one, 1 lakh rupees minus 10,000 is 90,000, and in the second year 90,000 minus 10,000 80,000 rupees. Like this, the value of this machine is decreasing per year, yearly wise. The next one is journal and ledger. Journal, first book of entry where transactions are recorded. In accounting, the journal is the first place where transactions are recorded. This is called journal. This is called the book of original entry is known as journal. For example, when the shop buys worth of 5,000 rupees, the journal entry would be like this. For example, stock account data to accounts payable. Because debit stock, because the shop now has more stock. Accounts payable is credited because the shop owes money to the suppliers. And the next one is ledger. Once the transaction is recorded in the journal, it is then posted to the ledger. So we take the information from the respective journal and post it to the respective ledger accounts. Okay? Then trial balance. A trial balance is a summary of all the financial balances in an organization's accounting system. It's used to check the correctness of the accounting entries. In simple terms, it ensures that the total debits equals to total credits in double entry system. Let's look at an example where total assets equals to total liabilities plus capital. Okay, this is the example of trial balance. And lastly, conclusion. That's it for today's video. I hope you found these accounting terms easy to understand. If you liked this video, please like, share, and subscribe to our channel for more accounting lessons. Let me know in the comments which topic you want next. See you in the next video.